Good morning, everybody. It's the 14th of January. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, guys.
Good morning.
Both all right?
Yeah, not bad.
You got a bit of snow up there, did you say, Ian?
Yeah, it was supposed to come overnight, and like everybody else, it didn't bother. It's like Santa didn't bother turning up, and then this morning it's hacking down.
A decent amount as well.
Well, it's a bit wet at the moment, but
okay.
it's starting to settle. Yeah,
Cool.
It's forecast to have it all day.
It's pissing down here, cold and wet, miserable.
Much like
yeah,
much like you.
Much like life at the minute.
At least you haven't got your woolly hat on this morning. You must have stuck the heating on today.
Yeah, I've got the heater on today. Yeah, a little bit colder than naught round the sides on the haircut.
Yeah, I like it.
Yeah,
like it. You want to wait till you go naught on top, mate. that's when you know you've really made it in life.
Yeah, absolutely.
I'm gonna have to dye my beard ginger, aren't I? Just to go with you two.
Match in, yeah.
Yeah.
Anyway, what's going on with markets? Obviously, news overnight. Trump's been impeached yet again, charged for the insurrection in his role from last week's riots, making him the first president in history to be impeached twice. Very little, if any, reaction from markets yesterday on the back of that. I guess they kind of have come to expect those kind of shenanigans from Trump and the US, so no real change. There's been a few other bits on the political spectrum that may have a potential to impact markets. The Italian government is at risk of collapse after a junior coalition party led by former Prime Minister Matteo Renzi pulled out. He attacked the current Prime Minister for failing to do enough to tackle Italy's problems. In the UK, Prime Minister Johnson warned UK hospitals could be overwhelmed as the country registered its highest death toll since the start of the COVID-19 pandemic yesterday. So clearly no sign of things getting any better on that front. Hopefully we are very close to a peak on that and we can start seeing things start to settle. Also some murmurings of a potential increase in the restrictions in the UK, which may come into force over the weekend. So we'll see. What's going on with the markets then, gents? Anything that
you would like? Let's have a little look at the longer term charts. We can see that this week, this is the FTSE. This week we've stalled after last week's decent up run. It's still looking slightly positive on the shorter term chart. Yeah, this is the hourly chart. It's broken above the Ichimoku cloud. We can see we now have support here, and we can see this level of resistance and we can even drag it back to here. So this is a level to watch in the FTSE, 67.75. We're knocking on the door right now, and potential for a short-term move higher. If that level breaks, we'll get stops above there. DAX as well is pushing above the 1400 level. That'll be a psychological level, obviously. I always like to see it break the magic 13 number in DAX. That's always been pretty good. Yeah, the high at the moment over the last few hours is 1414. So it's poked its head above it again. So there looks to be some good potential on a short-term basis for a push higher. CAC is doing a little bit of catch up. Again, it's above the hourly Ichimoku cloud, so good potential here. The US markets have not slowed down at all. All-time highs again yesterday in the Dow. NASDAQ, again, same, all-time highs, boring. And the S&P is pushing up again towards the all-time highs at 3830. So yeah, markets looking pretty decent over there, and over in Europe as well. The Nikkei is pushing higher again, 28,900, getting up towards the 30,000 psychological level. China, the only one really under pressure, and Hang Seng, nothing stopping that. So all positive news for the indices on a technical front, especially short term. Now let's look at gold. Gold, we did prices for our chart. Obviously, look at the daily first. We've seen a little bit of a slowdown in the negative momentum. it's hanging around this daily Ichimoku cloud. So there's a lot of backwards and forwards here, a lot of indecision, and but the pressure remains on currently. If we look at the 4-hour chart, I've redrawn this flag formation that we had drawn. It looks a lot more. It looks a lot more like a flag formation than it previously did, because there was only one point connecting at the top, and now yesterday's sell-off to 1828 or 1829, and the reaction higher has now formed 2 points below as well. So this is looking even more so like a potential bearish flag formation, which let's be a little bit more aggressive. Let's take the whole of the pole and extend that move down. The measured move target for this trade will be 1723. I presume this will be something like a continued push to the highs with the indices, and also maybe the dollar finding some sort of strength as well. Quick look at the dollar. I know Ian will go through it. The dollar index. This is that's just a short-term bullish channel on the 4-hour chart, and it's above the 4-hour Ichimoku cloud, which I like as well. So we've had a bit of a buy signal formed here on the cloud. It's a little bit of a testing moment at this point. I think if we can maintain levels above 89, 90, then we'll have good potential for this to continue higher as well. But I'll let Ian go into that in more detail.
Brilliant. Thanks, Steve, for that roundup. Ian, what are you seeing on the charts? You're on mute, mate.
Oh, nobody could hear me shouting then a minute ago.
No.
Yeah, we could. Yeah, we heard you. We just completely ignored you.
Tracy came in to tell me to look at the snow.
Look at the snow.
Yeah, it's settling. Look at the snow. It's like a big kid. I like Steve's analysis on the indices. The fact that they're still moving to the upside, because it lines up with this dollar index bias. We talked about this yesterday, and the fact that it stalled at 50%, and it had a bias to move to the upside, which it did, which obviously must have done Joe a bit of a favour on his New Zealand dollar short. But it looks like we're going to make a cipher pattern. So basically this down here, 61.8% and 88.6% is a bat formation. So I think we've still got this bias to break to the downside. And I think that might wrong foot a few today, because if you look at let's have a look at this chart first. If you look at this looks like it's just going to break to the downside, but I think what we've got here is a 261.8% fib. I think that's the first correction higher. So A, B, and then up in C. And as we said yesterday, this is sort of prime reversal zone, I think 122.75. Reflecting it also onto cable, sterling dollar. The flag formation is there at 137.35, so not as strong a rally potentially in cable, which actually lines up with this euro sterling. So even though we're only at a 224% extension, if I put, I'm not going to do it now, but if you put an extension on there, then that actually forms a symmetrical pattern, and it looks like we're just going to make a higher low. And if we look at the shorter time frame on euro sterling, we got a really decent move up this morning. Obviously got to break that high for a sort of potential double bottom to be put in place. Dollar Swiss, we talked about this yesterday. This was the main chart that we spoke of. The fact that we've got up towards this 261.8% inverse of euro dollar. In other words, this being the main wave, then A, B, and then down in C. Again, looking at sort of 88.20 as a prime long area. Dollar yen, and again, I think this is just going to come off the top here. We've got a confluence area down here at 102.97, which is close to this previous swing low, but I still think that 102.50 is going to be prime, because that lines up with higher time frames. and there's no stop in dollar CAD at the moment. These commodity currencies can run to higher extensions, and we've got this one here, which is 423.6, which is common in oil and dollar CAD. It's at 125.27, which lines up with the daily and the weekly timeframes, 261.8% fibs. So I think if you get any sort of mild rallies in dollar CAD, could be worth a punt. And Aussie dollar, we talked about this yesterday. We said that out of all of the currency pairs that had a sort of potential to move to the downside, which was dollar base, then this was probably one of them, and it was the potential for a head and shoulders pattern. I don't know if we're going to break to the upside. We've had good Chinese exports figures overnight, and that gave Aussie dollar a bit of a boost, and it's seen some of the cross currencies move to the downside. If it breaks this channel top, then you've got a cipher pattern up here at 78.63. So at the moment, a bit in no man's land, and I'm actually might go for a Euro Aussie long trade in gun to the head, which would basically say that this is forming a top, and could move lower from here. Again, Euro Yen, we're stuck at an 88.6% fib. Always a bit wary about those because they do form a lot of cipher patterns, or the one of the legs of a cipher pattern. Can't really get much of a feel for it. Again, if we get up to these sort of levels, then I'd look at a head and shoulders pattern: head, left shoulder, right shoulder, and a bit of skew whiffy neckline. So in the moment, really sort of no man's land. And I prefer to get short higher up. That's me, really.
Thanks, Ian. That's great. Okay, so on to the gun to the head stuff from yesterday. Believe it or not, gents, we had 3 winners yesterday.
Everyone's a winner, baby. That's true.
So I had Aussie US dollar. That's what I went for in the end. Obviously, we talked about New Zealand dollar as well, but I went for the Oz.
I thought you'd have got more out of it than that.
Yeah, it was looking good at one point, but it was 11 ticks on side at 9 o'clock, 0.31R. Ian, you had 0.77R on Euro New Zealand dollar, but Steve was the best performing trader on the day with 0.82R return on his oil short. So nice to see a little bit of black on the screen. I know they're not huge winners, but you know, we maybe put in a bit of a bottom here, and we can start picking some decent winners. I think if a few of these top patterns and bottom patterns start to form, as we are suggesting that they may, then hopefully we'll catch a few of those and be on to a decent streak. Either of you got a trade idea for us this morning?
Yeah, I've got one.
Go on in.
I am trying to pick the bottom here. This is Euro Aussie. This is a 160. This is a daily chart. 161.8% extension. Really doesn't look like it's going to stop. But if you go to this time frame, and if you look at it from the highs, it's quite dramatic. This move lower. That's the monthly chart. But if we go to this time frame, we have got a 261.8% fib here at 156.22. The hourly chart looks, if you really screw your eyes in, looks like an ending wedge pattern. We got a doji style candle in the last hour. The reason I really like it is that on loads of different time frames, this is my DMARC mumbles, and on loads of different time frames, we've got these what are called combos and 13s. So these are 13s. They don't necessarily stop at a 13. You've got to project where you actually where the stop is, and the stop for a DMARC is on a 13 count is the lowest candle. So you take the lowest candle and you take the length of that candle and you project it from that candle to make your stop. So basically, if you looked at this one here, even though the 13's there, this 11 candle is a bigger candle, so the stop would be down. You take the length of that candle and then you project it from the base of that candle, blah, 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 blah. Anyway, so the loads of 13s, 13 combo here, 13 here. And what I do like as well is you've got a 12 on the weekly chart, which could mean that there's upside potential. So enough waffling. It's got a decent, really good risk reward if we get a bit of a jog on, and I think with a stop, I'd prefer to obviously have an extended expiry, but I can't. I'm just going to stick it there. So getting long at 156.61 with a stop at 156.51, targeting 158.29 gives me 16R.
Oh yeah, that would do very nicely. Steve, you got one ready?
I have. I'm going to go for silver today. Now, a couple of things on silver. If we look back on last week's price action, we formed a bearish outside candle. On the daily chart, we look to be forming some sort of flag or wedge formation. So this looks bearish. There's potential for a run down to the $24 area without running into too much support. This we had drawn yesterday. This was this wedge falling. This wedge formation is a rising wedge, but it's in a negative pattern. The potential, again, it's a little bit like the flag that we had. The potential is for a move down to move down to $22. I don't think that's going to happen today or anytime soon, but that's what we're seeing. And on the hourly chart, we've got this resistance, downward trending resistance, which runs along with the Ichimoku cloud, which is underneath, so that's bearish, and it's the same on the 4-hour chart. So I'm going to go for selling silver at market, which is trading 25.21. The stop in this trade is I'm going to have 25.41, so quite a tight stop. And the target on the trade, I'll go for 25.31. Why not? That'll give us 4.5 to 1 risk reward. Let's be selling silver.
Lovely, thanks. I'm going to side with Ian on this one, I think, and take a look at Euro, New Zealand dollar. We've both spoken about this and suggested that some sort of bottom could be taking shape here. We have seen a sell-off down to a 78.6% fib level. Now, if this is going to work as a head and shoulders, then I think that has to be, pretty much the bottom or close to it. So I'm going to buy it here. I'm going to target a decent breakout of this head and shoulders up here. So I'm going to buy it at 168.89, stop loss at 168.55, and targeting a move to 170.25. So that'll be 4R. That plays out from here, looking for a little bit of a bottom to take shape on that. Obviously highly speculative and against the trend, but we shall see.
Nice one.
Okay, so there's the 3 trades for today. In terms of data due out later, we've got the initial jobless claims at 130. Claims expected to rise to 790,000. Anything else? ECB have we got today?
ECB monetary policy meeting accounts. I don't think it really moves markets, that does it?
I'm not sure. I'm not.
It's not the minutes, but. And then Fed's powers out later, 5:30.
Right, okay.
There's quite a few Fed speakers today. Rosengren, and then Bostic, and then Kaplan.
So there is a little bit of concern with regards to the Fed that they're talking about the tapering timeline of stimulus, which may upset markets a little bit. Just
as Biden's about to chuck billions at it.
Yeah. Who knows, eh? Okay, well, I think that's pretty much it, gents. Thanks very much for your roundups on the charts. We will be back tomorrow morning, hopefully with some success on our intraday ideas. Until then, gents, have a good day.
Yeah,
thanks for tuning in, Ian.
Cheers, guys.
See you later.
Bye.